Oil prices are plunging as the prospect of stability in the Middle East crashes risk premium, and an amply supplied market takes crude prices to new lows. Leaders from around 20 countries meet in Egypt for a peace summit today as Trump embarks on a trip to the Middle East looking for a permanent end to the 2-year war between Israel and Hamas. Brent crude is already flirting with $60 as West Texas Intermediate falls to just over $58 a barrel and still looks set to go further south. Hello, welcome back to Global Business Insights, where we delve into the headlines and probe a little deeper with perspectives to help navigate the turbulent context. To our main story on the recent dive in crude oil prices, US crude oil prices fell 4% on Friday after Trump threatened China with higher tariffs in retaliation for Beijing imposing stricter export controls on rare earth minerals. WTI crude tumbled below the critical $60 per barrel mark for the first time since May. A decisive collapse was also driven by bearish news developments. First was progress toward an Israel-Gaza ceasefire deal, erasing political risk premium, supporting prices, and then the notable escalation in China-US trade tensions triggered by US threats of higher tariffs on Chinese imports and Beijing's reciprocal port fees and rare earth curbs, all reviving concerns that we may be entering into a new chapter in a global trade war that would curtail economic growth and as such reduce demand for energy. China also vowed on Friday to protect the rights and interests of its companies after the US unleashed an array of fresh sanctions on Chinese entities for importing crude oil from Iran. The US Treasury on Thursday blacklisted around 100 individuals, vessels, and companies, including China's Shandong Qingyang petrochemical group, accused of buying millions of barrels of Iranian crude since 2023. Also sanctioned were the Rizal Shihua crude oil terminal at Lanshan port, accused of handling Iran's tankers. OPEC Plus release of a moderately stable production unwinding plan and the ramp-up in China's strategic oil stock building are both helping to maintain a floor to the decline in prices. At its latest meeting, OPEC Plus confirmed a gradual increase of 137,000 barrels per day in November, coupled with Iraq and Kazakhstan's agreeing to significant compensation cuts to ensure compliance. China's crude inventories increased by about 900,000 barrels per day between January and August this year, effectively removing barrels from the global markets. Analysts are now focusing more on demand and supply dynamics in energy markets and much less on the geopolitics. And this refocus is having the effect of lowering crude oil prices. Oil-dominated economies like Nigeria and Angola would be wise to stress test their fiscal health at about $55 a barrel and ensure buffers are adequate. Nigeria's vulnerability to large but more volatile portfolio investment capital inflows will also be watched. To other news making the headlines on the US trade conflict, China is slapping port fees on US-owned, operated, built or flagged vessels from tomorrow as a countermeasure to US port fees on China-linked ships. Trump also had announced new 100% tariffs on China effective November 1 in response to China's expanded rare earth export controls. The result was the S&P 500 plunging 2.7% on Friday, plus a weakening yuan shaking the market, with emerging market currencies under a fresh threat. And a cheaper yuan also adjusts for higher tariffs given the jolt in supply-demand dynamics. Beyond blaming the US for escalating the trade war, the Chinese are expected to try and negotiate with Trump before the November 1 deadline, or they can use yuan devaluation to put more pressure on the US. The US administration, however, also signaled openness yesterday to a deal with China to quell fresh trade tensions, while repeating that recent export controls announced by Beijing were a major barrier to talks. Vice President Vance called on Beijing to choose the path of reason, claiming that the US have more leverage if the fight drags on. Trump also said everything will be all right and the issues may soon be settled. And in France, President Emmanuel Macron reappointed Sébastien Lecornu as Prime Minister, hoping he can draw enough support from a deeply divided parliament to pass a 2026 budget. The development risks the wrath of his political rivals, who saw the best way out of the political crisis was for Macron to either hold snap parliamentary elections or resign. Lecornu's first test will be the delivery of a fiscally prudent budget, which addresses troubling deficits. So far, reactions of leftist leaders suggest the new government may just be as fragile as those before it. Still in Europe, a tougher stance on immigration steps up as European Union member countries began rolling out a new entry and exit system on Sunday at external borders, electronically registering non-EU nationals' data. The entry-exit system, EES, an automated system, now requires travelers to register at the border by scanning their passport and having their fingerprints and photograph taken. And it's to be introduced over a 6-month period. The move aimed at detecting overstayers and tackling identity fraud and illegal immigration comes amid political pressure to take a tougher stance on migrants. And this week, the IMF World Bank meetings take center stage. Central bank governors and finance ministers from across the continent will be mulling over the many macroeconomic challenges. In Europe, the bloc has been more preoccupied with domestic issues amid external pressures. The most pressing questions will be about the global economic impact of the many unfolding forces of transformation and the policy turbulence we are seeing. And indeed, the world economy is coping perhaps better than was initially feared, but still worse than needed, according to the IMF Managing Director Kristalina Georgieva. When the International Monetary Fund met in April, analysts had predicted a US recession in the near term with many negative spillovers to the rest of the world. Now, according to Georgieva Kristalina, the US economy, as well as many other advanced and emerging markets and some developing countries, have done better than forecasted. Now, the IMF also sees global growth slowing only slightly this year and the next, in a world economy that has generally withstood acute strains from the multiple shocks. The IMF meetings hold as we get more data releases. China trade data came out today, and tomorrow we get German inflation and UK unemployment data, with UK GDP data also coming out on Thursday. Also this week, we may continue to see the advantage of scale for banks playing out as the biggest US Wall Street banks report their third quarter results. Analysts see profits among the 6 major US banks to be climbing 6% from Q3 of last year. Tomorrow, JP Morgan Chase, Citigroup, Goldman Sachs, and Wells Fargo will be kicking off reporting. Bank of America and Morgan Stanley will announce their earnings on Wednesday. Analysts see investment banking and trading going up for a 7th straight quarter, with revenue from core lending also set to go up as funds-based income benefits from healthy margins. A subtle loosening of capital and supervisory oversight could mean a surge in fee businesses and improved lending margins. We could also get comments from bankers on the latest trade turmoil playing out between the US and China, the impact of de-immigration and new tax legislation, and a somewhat prolonged government shutdown, delaying economic releases, federal lending activity, and IPO approvals. The European Union last week pledged to invest 11.5 billion euros, that's about $13.3 billion in South Africa, in clean energy, infrastructure, and pharmaceutical projects. The bulk of the investment aims to accelerate South Africa's shift to renewable energy through new power generation capacity, grid upgrades, energy storage, and green hydrogen. South Africa is wooing investors to lift weak growth and bring down high unemployment, also as 30% US tariffs have also dealt it a heavy blow. The expiry of the African Growth and Opportunity Act last month is also leading to calls for an extension and, of course, for other trade deals. So this deal with the EU certainly helps. The EU deal will also support production of vaccines for the African continent. S&P Global upgraded Egypt's rating by a notch on Friday, citing ongoing reforms that have helped gross domestic product growth. Egypt's annual inflation rate plunged from a record 38% to 11.4% in September, helped by an $8 billion bailout program from the International Monetary Fund in March 2024. S&P's upgrade to B is the first since Egypt started receiving IMF financial support. Botswana Mines Ministry said on Friday that it has enforced a new rule requiring mining companies to sell a 24% stake in new concessions to local investors if the government chooses not to buy the stake. The Mines and Minerals Act previously gave Botswana's government the right to buy a 15% shareholding in any mining concession upon being licensed, with an option for a higher stake in diamond projects. And in Nigeria, the focus is on September inflation data expected to come out on Wednesday. The inflation rate fell to 20.12% in August from 21.88% in July 2025 and is expected by analysts to continue to trend downwards, coming in possibly under 20% for the September read. According to Minister of Budget and Economic Planning Atiku Bagudu last week at the 31st Nigerian Economic Summit in Abuja, he said the inflation rate will ease to 15.75% in 2025 and 14.21% in 2026. He added that inflation will further moderate to 10.04% in 2027, given the consistent monetary policy focused on price stability and complementary fiscal consolidation. China's exports grew 8.3% in September from a year earlier, beating estimates for a 7.1% rise. Imports also jumped 7.4% last month from a year ago. All this as a trade deal with the US remains elusive. West Texas Intermediate Oil WTI price recovered around 2.5% after losing more than 5% in the previous session, trading around $59.40 in early morning trade. This was after Trump shared some remarks with a more conciliatory tone on Sunday following Friday's tariff threats on China. But Asian markets were still mostly lower after developments in the US-China trade spat spooked markets, though there were signs today that risk sentiment had steadied, with Wall Street futures looking up again. And as the Israel-Gaza ceasefire holds, Palestinian militant group Hamas released surviving Israeli hostages this morning, marking the first stage of the ceasefire deal. Well, that's all we're able to take on this episode of Global Business Insights. This is Bode Yoshosami. Thanks for watching. Bye-bye.